Good morning, traders. It's Chris here from Serene Education with the 4 majors notes update for the 21st of February 2012. Hi guys, it's going to be going with 4 majors on our larger time frames. I'm sticking to these now for the time being because of all the volatility intraday, and I look for setups on those time frames. It just alleviates all this volatility intraday that can get you into a lot of trouble. So without further ado, I'm just going to start off with the euro against US dollar on weekly. Wasn't available yesterday primarily because we had a student here, so just busy with them. But you can quite clearly see yet another indecision candle. That was on Friday, and then yesterday's trade in the markets very tentative. US bank holiday yesterday, not a lot of volume. Didn't see a hell of a lot of action in the morning. European session wise, got some action. Apologies. It moved slightly up and down, but this morning on the Asian session, news filtered through the Greek bailout possibly being done and signed and dusted, and we saw a nice up candle. It's a movement, but you'll notice straight away that really fizzled out. So on the daily, you can quite clearly see here we've got these highs at roughly around the 13,300 mark price. Heading into those resistance levels, a nice little bounce here, consolidation bounce at the fib retracement 23.6 mark, sorry, 38.2, apologies, and then a nice steady bounce upside, a very indecisive up candle followed by some decision yesterday. However, this morning, as the news filtered out with the bailouts being pressed, not a hell of a lot of momentum, and very indecisive, a lot of upside movement followed by a very strong pullback this morning at the open of the European session. So market's still tentative about it. We'll see if that remains to be seen. If we can hug those highs again, we could see potentially prices really pushing for that all-time break here above these 13,200 marks. So intraday, you'll notice the CTC on this time frame, is going sideways. Still negative nonetheless. We have had a bounce above 23.6. It is testing those highs. So it's going to break above those highs, a nice bullish engulfing to confirm that this is no longer a resistance level, and we should be looking for further highs. For our chart, here we go, quite clearly states 13,300, roughly around that area, is a serious resistance level. Price failed to boost through it. A relative strength index was showing us a clear slowdown in the market when we got to these highs, and then we saw a sell-off. Now that sell-off is back down to the 38, back down to the 50% intraday, which was the institution moving average through here. Apologies, you can only just see the moving average, but the institution moving was just below price here, and then we had a nice physical bounce to the upside. Now we're into this area here. You can see through 19th, very indecisive, a pullback, and then a continuation higher. This candle coming first thing this morning, heading higher into this area, but not maintaining those highs. The CTC on this time frame is blue across the board, so look for highs. However, we want to see a genuine close above the top in here. Otherwise, we're just trading into this very strong resistance level above us, and the last thing we want to do is be going long on something that's potentially looking to go short. Okay, you can see here, for example, prior highs here, where price is moving. The RSI are definitely getting stronger, so it's confirming that momentum is genuine momentum to the upside. Okay, to start with here, notice to be higher. However, here at this level now, the 13,300, as I mentioned, is a strong resistance level. You'll notice that RSI on the closer time frame here, pretty much starting to show a bit of convergence now. Sorry, apologies, divergence. Getting it wrong this morning. Need to have some more coffee. So, definite bounce this morning, or the past couple of hours since the 16th. Okay, if that 1300 is a definite resistance area, then look for these areas of potential support. If price can maintain itself above 23.6 or even the 38.2, because it's still above the institution moving average on our hourly time frame, RSI is above 50, then we could potentially look for a pullback followed by a continuation to the upside as the market wakes up this morning and gets in. The news will filter through with the Greek. Is it genuine? Are they happy with the bailouts? Is it a genuine, a positive move, etc.? All that will be filtered through, and we'll see exactly what it is. But if this candle remains bearish as it sounds like at the moment on hourly, and it breaks below the 20.6, then ultimately we should be looking at 38 38.2. That's quite a lot of indecision after a bullish upside. If we do get a bearish engulfing here and it engulfs all of this upside range on the hourly, it'll just take away all that momentum. Ideally, we want to see a break below 50 to confirm that that move is generally negative. Otherwise, it could just be a pullback to these areas, and then we could see a bounce higher. So just factor that into your trading setup this morning. Next up is sterling. Okay, weekly going sideways. Start of this week slightly higher on the body highs of the past 3 weeks. You can see quite clearly resistance. Price has been trading higher, but closing around this area here at 15,820. So clear on the weekly, you can see resistance, and price is trading above that area as you speak. So if it remains those highs, then we should be seeing price moving higher. However, on our dailies, we have this area here at 5,900 to be worried about, primarily because of the prior highs at the tweezer top, a failure at a resistance level, i.e. the institution moving average. We've seen the institution moving average failing before in the past, so be aware. Okay, it has to get above that area. Close above the institution moving average is a psychological break to a bullish upside break confirmation. We failed here. If it fails again here, then we could see potentially another fall to the downside. So as it stands at the moment now, if you want to take the low here to the high, you can see quite clearly that 23.6 is being traded above 38.2. Nice morning star formation here, downside indecision, and we should be trading further up to the upside, and 1590 or 5900 should be the ultimate target, or back to the institution moving average. But we do need to see the institution moving average being breached to see further upside movements. Okay, we don't want to be guessing. We don't want to be speculating at this time. Yes, I'm going to go long. If we do get a break above and a close above, then funny enough, which is 38.2 here. But to get above, then we should look at 50, 61, and ultimately way up to 100 here at 1635 as a potential long-term, because we're looking at the daily, a long-term trade. Okay, but price has to do the first and foremost. The most important thing is get its backside above 15,900 or the institution moving average. Very, very important. Until then, we could see consolidation occurring intraday. Let's look at our 4-hour time frame to show you that. You can see quite clearly price not really moving all that in a hurried way, especially after this bounce to the upside here. Price is pretty much making its way tentatively to the upside, and then we've seen a pullback over the last 16 or 20 hours. So we need to see price rallying, breaking above 15,900, finding support, whether it be a nice hammer, bullish engulfing, etc. above that, to see potential for further upside movement. So the CTC strategy is in our favor on this time frame. We just need to see that break above. So if you want to be patient enough, this is when patience really pays off. 5,900 is just above us there. You can quite clearly see. There we go. And you can see price is really fallen over. Look over here, for example, that bounce to the upside. And then we just hit a ceiling level. Very indecisive trading range here. And price has fallen back. That fall back now on hourly. Look at the lows here. We saw the bounce to these highs. 23.6. Bit of support through there. Price fell through this morning on the Asian session, however, finding not really falling with a lot of momentum. This candle engulfing these two indecisive candles here at 23.6, and then we saw price moving reverting to the upside. So the momentum is still there, favoring longs to the upside. However, the more it finds resistance now at this level, whether it be here at 1588 or the 15,900, the institution moving on to the daily, then ultimately we could see potentially price just falling over. But we want to see a clear decision from that. A nice bearish engulfing at this level, confirming either a shooting star on our 4-hour, something along those lines. Bearish engulfing, shooting star, resistance, tweezer top, something along those lines, and our daily price needs to be trading, or this the RSI needs to be below 50. You can see quite clearly as we went above 50, it stayed, and you could be in it still. Below it. That's it. That says what it says on the tin. It does exactly what it says on the tin. Excuse me. Okay, so at the moment now, tentatively trading between these two parts. You can get look for trades intraday, 30 minutes, etc. lower time frames to trade to these areas. But if you're trading into resistance, then you're not really going to get a lot of bang for time invested. So is it worth it? In my eyes, not really. So be patient. Let's see what happens in the last couple of days. Get a break above 5900, then we're looking for longs for the future. Failure there again, nice bearish engulfing. Then we should be looking for shorting opportunities, and you can pick any one of these areas here as a potential target to the downside. US dollar Swiss franc weekly sideways, still going sideways. I made some nice money on this, just a quick in and out, but you'll notice there's a lot of support through here, and it'll keep going along this 20 period moving average and the support here until we get a genuine break lower or bounce higher. Okay, this one is really easy to understand. 9100 here is a support long term. Daily, you can quite clearly see prices fell to break below that level and move lower. Yes, we had it yesterday. I was able to make some money on this one over the past couple of days. Pretty much getting in after the shooting star here at resistance. Cheeky little trade. Failed at resistance, failed again. Nice shooting star, long wick, bearish engulfing here, cancelling this out, and I just thought, well, let me get into it and that'll be my target, and sure enough, that's what I got. Perfect. Daily, as it stands now, 9100 is a strong support. A lot of it, you can see quite clearly, almost a full number of weeks, price is just failing to break below that. We do need to see, everything will be in our favor if and when price closes lower than the 9100 mark. Break below 9100, you'll see there's a lot of air now. There are one or two areas where we've seen price bounce, like 89.50, so nice little area. Back to the institution moving average here, just close at the 875 mark. And then we had this little fake breakout here, but that fake breakout taking us back to 86 levels where we saw the Swiss government pegging its currency above. So if it gets close to 86, people start wondering if we're going to get another call for action from the Swiss government. So there's a lot of movement between where it is now to that area again. So if when we get a break lower, then we do exactly that. Okay, you have to say that. The moment now, support. I don't want to be shorting into support because you're just going to risk potentially with price bouncing higher. Okay, it's very tentative trading at the moment. Now you can see the Asian session, very indecisive. Open and close on the days is still looking very, very close. The ranges are very, very close. CTC overall is looking negative, but we are in a bearish consolidated range. Got to see a breakout of that to confirm that we should be looking for shorting opportunities. The 4 hour shows us the same picture, a lot of red. Above us, prices has pulled back. This is where I made some of my money here. Really great trade, but at the moment now, it's on a support. Okay, institution above price, all the moving averages above price. It's still negative, but that 9100 is a very strong psychological support area. Got to break it. Get a nice bearish engulfing candle below this. It'll tell us that people are sick and tired of going sideways now, and their momentum still favoring shorts. Then we'll start looking for potential entry signals, potential pullback. Then you can really half your risk by looking for the push off the underside of this resistance level. Previous support down to those areas as I mentioned on our daily. Hourly also giving us the same signal. Look at this, we're trading below the 50 period moving average on our relative strength index. And if you look at the 9100 mark, where price is trading now, look at where price traded into. We're seeing a relative strength. Even price trading these areas, our relative strength is starting to bounce higher. Okay, if this candle closes higher, then notice that RSI is starting to do exactly that. It's starting to move away, and we should be looking for potential back up here to the institution moving average, potentially at 916 as a trade, a potential trade. Okay, I use the word potential a lot. Probable is another one I could probably use, because it's all, we're just looking for setups that give us a likelihood of a trade. You can see here price being capped by the swing lows. Okay, so we're in the squeezing zone now. We could see a break either way. Break higher than this and close higher than 91.3 at support. There'll be a nice bullish engulfing, confirming that there's now the strong support, and we should be looking for upside. RSI needs to close above 50 on this time frame, the hourly, and then we should be looking for higher swings. Other indication, RSI is below 50, so it's still negative. We get that break below, nice bearish engulfing to the downside. Then we get a pullback and a failed pullback at prior support, which comes new resistance, and then we should see price just falling to the downside because of that. That's how you should picture it. Wait for the close of the candle. This hourly candle has not closed yet. If it closes lower, then start pondering, this is good because there's more action at the underside of a 9100 and it's below 50, so we should start looking for more bearish sentiment to creep into it. Until then, just be patient. Got to be patient, guys. Patience pays off. Last pair of the day is US dollar Japanese yen, and this one, in fact, guys, is the one who's been giving us the most most run for our money in the past weeks. Beautiful trade. The last one I'd ever talk about, the last one I'd ever mention to trade, has been giving us the most steadiest profits over the last couple of weeks. Been in and out myself. Never know when to really go with it or not, because it has been so skittish over the past. Well, we all know what it's like. I mean, I don't need to really get into it. But look at the gains last week in particular. Huge moves, guys. Massive moves. Really taking out those resistance levels here at 7,800. Moving towards the institution moving, the 50 pair moving average, which has been a very strong resistance level for this pair for as long as I can remember. A very fuddy-duddy trade. 50 pair moving average acting as resistance as well. Breaking straight through those ones. The 80, which happened to be a price support and resistance for this pair. Let me just get this down so it looks all nice and neat for you chaps. There we go, another one. A lot of support through November, December, all of last year, then through to this year. Break lower. It wasn't just going anywhere. A lot of intervention between here and then from the Japanese government. Noticeably here, June, July, August last year, again, October, November, December of last year. Not really moving the market at all. Sentiment was just not there for the US dollar. And then favorable market. I mean, 2 weeks ago we had non-farm payroll figures come out, and it just came out and just put a stop to this whole downside move. Look at this. We were going into that week, that Friday. We had 3 indecision candles. Yes, a lot more trading at the high end of it. Really slowing down after this resistance level here. Trade shooting star or an evening star formation. Ideally, this one would have been lower, but anyway, clear resistance, falling lower. Then non-farm payroll comes with some fantastic figures, and price has just been rallying on that. Japanese government said they'll do anything to help keep that momentum up, and sure enough, we had this first rally. Slight pause, you had prior resistance, a little pause, beautiful, and then a massive upside candle here daily, breaking right above institution moving average, clearing out the 7,800 mark here, very, very clearly in doing so. Just clear sentiment moved to upside, favoring upside, and sure enough, we went straight through the 100% mark, fib extension area of the initial move. Great. Then we wanted a slight pullback. That occurred slightly, but the momentum was so good, it's still going, guys. 161.8 is our next target. 1.168. Can you believe it? 80%. Yeah, the 80 mark is another one we've got to really, really just be aware of. We are trading into that area right now as we speak. There we go. I'll put it on so you guys can see it. It's right there. Why it's so significant? That was a very strong support and resistance level previously. Before we saw the break low, you can quite clearly see. Got to get above that. Then we got the 161, and then there's more likelihood of a potential oversold situation. So we should see potential consolidation. Yesterday's trading range, a good example of that, moving higher, and then by the end of close of US session yesterday, really moving back against the trend. Here again this morning, Asian market really picking up and moving higher again. Really, really tempting. Market sentiment is still favoring upside. However, that 80 is still in play. Wait for a break above 80, and then look for consolidation above that area. If price can remain above 80, psychologically, it's good for more. It's good for more. Okay, so factor that into your trading, guys. Put these areas, 80, mark them down on your 4 hour. 80, very strong area. Look at that. Look at these moves on the 4 hour. That's the reason why I love trading 4 hours. Hourly trades, you get beautiful extensions and pullbacks, It gets rid of all that fuzziness you get on 5 and 50 minute charts. It's fantastic. Really, really clear breakouts. Resistance here, really selling into it. Evening star formation here at resistance level. Price really moving higher. Breakout, pullback, continuation. That's what's happened. That's what we wanted here. Clear breakout here, clear pullback, and a continuation. So if you'd got in here a couple of days ago, you would be singing it. You'd be very, very happy with the market. But overall, this is a massive move here from the market. The US dollar Japanese pair, and long may it run. As long as it gets above 80 now, it should remain strong, bullish. So let's see if we get a close above 80. Okay. As we head into 80, are we seeing RSI relatively dipping? Yeah, we're testing those highs now. Quite clearly see. Relative strength is peaking out around about the 68% mark. Here in particular, we had an attempt yesterday, a failed attempt, and we're well over that area. The second attempt, now you'll notice we're attempting those ones, but RSI has definitely dipped. So is that momentum generally falling now? As we go into this strong resistance level here at 80, that looks potentially the case. So just be aware that RSI is well above 50, so that's good. It's just telling us that the momentum is still favoring upside. The trend line now on an hourly is well in play. We're going to this area now. We're seeing price being squeezed now between 2 points, the trend line and the major resistance above us. We need one or two things: a nice bullish engulfing to the upside, breaking with that, punching through it with a lot of guts, so telling us that price is still wanting to trade higher, not really interested in prior resistance. We want to go long, or we see a bearish engulfing here or shooting star. A lot of momentum. It's got to be a nice big juicy candle confirming that sentiment is now negative. Ideally one that takes away all of this. Okay, a break below 79.40 in particular would be even better. Just get below all this. Nice bearish engulfing, and if that's the case, then we should be looking at our support down the bottom here to our highs here at 80 if you wanted to, or the highs of these candles. That's where prices pulled back. See here, 79.30. Clearly an area. Or if you take the 80 mark itself, look at that, 23.6. Very much the support. Break below 23.6 will take us through this box, and then we should be looking for extensions back to the downside bearishness. 38.2, 50%, 61. Back below 61, we should see prices returning back to down to those breakout areas here at 77.70. Okay, so either or has got to happen. Be patient. Here again, we want to see a trade higher or lower. Ideally, you could start trading these intraday, but you risk the wrath of actually trading sideways and into a prior resistance. It doesn't really bode well for those who. It's one of these ones where you got to be patient, and when you're patient, you shall be rewarded. So factor that into your trading, guys. Other than that, have a fantastic trading day. News-wise, there's a lot today. Yes, there is. There's a bit of a speckled max. There's more. Seems to be more happening on the other side of the lake, Canada in particular. But the Greece news is probably going to be the most important one. What else have we got? EcoFin meetings. We've got Public net borrowing figures at 9:30 GMT this morning for sterling. Expecting less. The previous figure was 10.8 billion. They're forecasting a negative 8.9. So public sector borrowing they're expecting to be lower. And if that comes slightly higher, I think we'll see how that factors in with sterling. But I think everybody's going to be potentially looking at Greece. The actual story. Is it done and dusted? But you're going to find a lot of traders now going to sit and peck at it to see if it's genuine, really being supported. Is it true stuff? We've been there before, guys. A lot of traders out there just aren't, they're not going to be taking it at face value. They want to know they'll be probably pecking to death to see exactly if the Greeks are genuinely interested in this bailout or not. So yeah, just factor that into your trading, guys. Until then, trade serenely.